In 1950, British computer scientist Alan Turing had an idea. He proposed what would later be known as the Turing test, which did away with all the previously complex questions around artificial intelligence in favour of a much simpler one. Can a computer talk like a human?
Warning, 40,000 volts.
The machine robots must be destroyed.
Exterminate!
Fast forward to the past decade, and for the most part, AI chatbots have been pretty terrible. Impressive only when you ask them to do narrow, well-defined tasks. But in November 2022, after years of tinkering, a research lab called OpenAI made a breakthrough.
ChatGPT.
It's a chatbot, and it's basically learning how to behave like a human. It knows everything about everything.
It's a system that can make dreams, thoughts, ideas flourish in text in front of you.
A new class of AI has been unleashed.
A linguistic superbrain, ChatGPT can write jokes, computer code, college-level essays, and even explain scientific concepts at multiple levels of difficulty. It was the first time that such a powerful tool was made available to the public. And more than just sparking hysteria, it stirred questions of how this kind of technology can be used to improve our lives. Especially for ChatGPT's creator, Sam Altman.
We will see in the coming years AI medical advisors, AI tutors that can teach you math or other topics, AI programming assistants that can help you write code. We're starting now, heading into a world where a lot of the things that people want, they can, through a text interface or a visual interface, have an AI help them do.
But what about investing? If it's now a mainstream idea that AI can make decisions about your health, what about your money? One innovative approach has been pioneered by Magnify, the AI-powered platform that offers a blend of execution and assistance to help investors build tailored strategies, meet their goals, and keep a watchful eye over their investments. Magnify likes to think of itself as your investing co-pilot, like Siri or Alexa went to investing school, or as CNBC called it, ChatGPT meets Robinhood. This is the Finimize Podcast with me, Carl Hazeley. In this episode, I speak to Tom Van Horn, Magnify's Chief Operating Officer, about how he and the company keep up with the fast-moving world of AI and how to use tools like Magnify to become a better investor. Let's dive in. Tom, thank you so much for joining me today and welcome to the Finimize Podcast.
Carl, thanks for having me.
Let's get right into it and let's get everyone on the same page to begin with. Magnify is a 3-year-old company, so let's kick off with having you explain what it is, what it does, and how it came into being.
Yeah, I think more than 3 years ago, we identified there's a lot of frictions in the investment industry for retail investors. And we started off with the thesis that it's just really hard to find investments. There's so much product out there, tens of thousands, ETFs, mutual funds, you bring in share classes, it's overwhelming. Individual stocks, there's new products launching every single week, thematic focused, different types of strategies. And even for professional advisors, they need advanced, sophisticated tools to be able to weed through all of that to make educated decisions. The retail investor was really, really left in the dark. So we started simply with sort of what Google does for the internet and allowing you to just use natural language in a very simple search bar and being able to get access to where you need to go on the internet. We applied that to the investment world. So we bring in a lot of professional level data into the platform, real-time data that users can use natural language to search for investment vehicles. And then over time, people were staying on the platform and wanted one-click actionability. So we gave the ability for people to open up Magnify investment accounts, do all of their research in one place, click immediately to get into those investments if they wanted to do so. But what we had noticed was that not everybody was ready to actually have an idea or search for investments. People were coming with questions. When can I retire? Is this investment too risky for me? Those types of things. And we navigated along the way now to introduce generative AI as a part of the picture. So not only can you search all of these vast investments and get research very, very easy to understand through natural language search, but you can also go on conversational journeys with our AI tool, which is what users are using us for today.
Wow, that's it's a pretty powerful mission, going in parallel with what Google's done for general search for investment product search. And obviously, AI is a massive mega trend of recent months, years, even at this point. How is AI revolutionizing the way that we manage and analyze portfolios?
Yeah, I think really AI has the ability to simplify things for investors so that they can understand them in their own terms. I mean, this is a very intimidating industry, investments. There's acronyms, there's formulas, there's a level of sophistication. And oftentimes, as an individual investor, you have just a very simple question you're trying to ask. And being able to obfuscate that complexity and being able to interact with an individual in their own natural language and how they would speak to be able to help get them to answers that they have about the investment world is extremely powerful. Technology like this also has the ability to scale. So it can be distributed to the masses. Not everybody's in a category that professional investment advisors are chasing them to be clients. There's over 30 million brokerage accounts in the U.S. That are people that have gotten access, that are investing and trading today. But they deserve the ability to have access to intelligence, not just access to the markets. And that's what I think AI can really solve. I think a good example of this application that has seen great adoption is something like a Fitbit or an Apple Watch, where these AI tools are now telling you, "Hey Tom, you haven't slept good this week. There's something going on. I notice your resting heart rate is higher than it usually is. Are you feeling okay? Maybe you should scale back your exertion a little bit on your exercise." And that's not just a one-time answer. Like you plug this thing in and all of a sudden it tells you that. That is getting to understand me. It knows me over time. It's interacting with me. It's taking a lot of data on me, and it understands that, hey, Tom is usually sleeping like this. Something's off. Or Tom usually has a heart rate like this. Maybe he's starting to get sick a little bit. And giving me that feedback, I think in the investment world is no different. AI has the ability to personalize those investments as well, and then keep an eye on them over time for individual investors.
Yeah, the Fitbit example really speaks to me. When I get through half a bottle of wine with dinner, the very next day it tells me I haven't really slept. I'm like, well, I felt like I slept, but then I get to lunchtime and I completely sort of collapse. I guess if I think about, even 3.5, 4 years ago, if I'd asked you how AI would evolve and change how we manage our investments right now, the answer might have been similar to where we are right now, but you probably would have been thinking 10 years out. And, where sort of large language models have come, generative AI has gone, it feels like, we're moving much faster than anyone would have expected. So with the caveat that you're almost certainly going to be precisely wrong, but hopefully directionally right, where do we go from here? What does the future look like?
Yeah, I think initially everybody kind of wants an easy button, and they just want to be able to click something and all of a sudden it's the best for them and it's better than anything else that could be out there, and I don't have to think about it. And I think that's largely some of the early mystique, if I go back several years, of sort of black box solutions. And I think that lends itself more to, algorithmic trading and those sorts of edges that you have over somebody else that's out there. And I think largely, I think what we've learned is that investors want to stay in control. So there's a happy medium of that human plus AI collaboration. And I think the evolving that we're seeing now with these language models is the ability to deliver this intelligence layer as a co-pilot alongside these humans that are making decisions so they can make better educated decisions. It's not a black box. It's not going off doing crazy unknown things that you don't understand, but it can be there alongside of you as your life evolves, if your needs and your wants change over time. It can bring that intelligence into your decision-making process.
I think that intelligence layer and that co-pilot, I think, is really, really important. And it's something we're seeing in our data. So our recent survey of modern investors showed only 14% of people said that they'd used AI when making an investment decision. And 3 months ago, in the previous quarter, in the second quarter, it was 36%. So a big drop off, which suggests, to me that maybe en masse, the tools haven't quite caught up to expectations. This isn't a plug and play sort of tool. It does need to be more of a co-pilot. And there's a question on, whether things have caught up to what maybe where the hype was in some circumstances. So I guess all that to say, is that what you're seeing from a competitor landscape? Because obviously there's a lot of noise around AI investing tools, and we'll come on to Magnify specifically later. But I'm just wondering whether you're seeing a lot of in the space of things going out there that maybe are half baked and are trying to do a bit too much.
Yeah, I think when we look at that data, I think the own definition of what a retail investor has on what AI is also changing. I think people are learning. You know, pre ChatGPT, I think there's been a lot of benefit on the news and the headlines and the adoption of these different language models that are out there. But I also think this emphasizes the need to have vertical expertise. And what I mean by that is investments is a very specific, sophisticated, deep domain knowledge. And I don't think it's a fair comparison for the, Google Vertex or the ChatGPTs, OpenAI solutions of the world to go that deep in a specific domain. I think the value that those large language model providers are really bringing to any application of AI when you're talking about conversational and generative AI is that they're really helping with the language translation to understand intent of what people are asking for. And I think there will be a few winners there that will separate themselves and kind of take the lead. And I see that as a tool for companies like Magnify that can actually leverage. But once it comes into the vertical financial domain, that is a different story. That is where you can't have those things like crazy answers and hallucinations. And I firmly believe Magnify is registered with the SEC. We're an RIA. We're delivering everything that we do in a compliant framework. I think that people have to understand that they can go out and play with this fun tool because they heard about it from their friend. It's only going to go so far. It might not have real-time data. It doesn't really understand you as a person when you come back and things that you have done before. And it's serving a purpose. It's surfing that language translation problem to help mature that in the industry. And I think that's great. But once you get into a specific vertical, I think people just need to find tools that are in a regulated environment that go deep in the domain expertise that they're servicing.
Yeah, I think that's a very fair point. And you see that in other industries. If I take one example being classifieds, you have, the Craigslist, or I've got to say it this way because I'm British, Craigslist.
Yes.
General classified space, and then you've got super deep specific things like real estate. So in the UK, Rightmove, Zoopla. In the US, you have dedicated real estate platforms, dedicated food delivery platforms, and so on. And you verticalize, and that's where you build your speciality. Maybe just to poke the bear one more time on this, I guess when I, as a retail investor, for one, look to the future and think, where's AI going to go? I can't help but think about, this black box of knowing me better than I know myself, because I might know that I should be thinking about investing over a 20, 30, 40-year horizon. I should be thinking about my pension. But all of a sudden I might think, Bitcoin, and just chuck a bunch of money in there and just, do something that perhaps isn't in my long-term interest. I guess with one broker that we spoke to recently said that 1/3 of retail investors think AI will eventually outperform money managers. So I guess, is that a slam dunk for AI? Is it really that straightforward? Will there be a black box that can manage my investments better than I can do it myself?
Yeah, you hit on a couple points, and I think the latter and the whole black box idea. Just understand that money managers are adopting these types of technologies as well and applying them to their specific processes to be more efficient. So I think in the end, everybody will be benefiting from the advancements we're seeing in AI. I think we'll see better products. We'll see better tax managed products. We'll see better domain and industry specific type products being created that AI is able to look through all of this data in a more efficient way as they're building products for retail investors as well. So I don't think it's more of an and conversation than it is an or. Is kind of see when it trickles down to the retail investors. But I think you hit on a key point. The idea that over time, taking emotion out is really, I think, what you hit on with the whole Bitcoin example is, this is very exciting right now. And I, as humans, we seek instant gratification. And I think AI is something that can be in that co-pilot fashion. It's alongside there with you. What is the impact if I buy this? You should be able to ask that question. And that AI tool should have access to your financial picture and understanding and say, well, here's the impact. And by the way, 2.5 years ago, we set up this particular goal for you. So by doing this account is no longer tracking to that particular goal. That might be okay. Nobody can define their life at 20, 25, 30, 35. Things change over time. But that check and balance of, if I do this in my account, what is the impact? Or what if I start saving a little bit more? Where does that put me? Maybe my lifestyle changes as I age, and I'm reaching for more things now, things that I didn't anticipate 10 years ago. That is something that AI can really be a check and balance for people over time. It's alongside with you as these things happen, and it removes the emotion. It removes that meme stock excitement, that maybe that Bitcoin excitement, where all you see is that one little headline of somebody's now a millionaire. And I think that there needs to be a more rationalized approach when you're talking about your long-term goals.
I guess the flip side of being more rational, less emotional, let's say, is, or potentially one of the risks, is the downside around potential flash crashes, right? We've seen algorithmic-based trading strategies drive flash crashes in the past on certain assets. Now, on the one side, we spoke just briefly about the entire industry moving this way, whether that's professional funds, professional money managers, all the way through to retail. Presumably that could happen via AI too, and that's a risk to be aware of.
It is, but I think a lot of that already exists, and I think markets have reacted with controls of having different circuit breakers in place when different things, so that those different algorithmic trading models, don't run based on unanticipated events and things of that nature. So I think that was a learning process we've gone through over the last 5+ years as technology has come into the markets. But I do think it's fair to differentiate that type of application of the tech to the algorithmic trading side of it, versus retail investors that might be more focused on longer term wealth outcomes and kind of their process for planning and reaching their goals. I think those are two separate applications. And I think on the retail investor side, that is where AI has the opportunity to communicate with you when events like that happen, to say that, listen, something's going on in the market right now. Here's what we see. Historically, has this happened before? This is what it means to you. What does recovery look like after similar events? And largely, I think, to give another example, that's almost the comfort side of having this AI watch over your investments for you as a retail investor. In that co-pilot fashion, you're still in control. We're firm believers in that. But to me, I liken it to a WebMD, where the high friction of having to call a doctor, take time out of your day, go in and see the doctor over something. But there's a lot of quick access comfort on saying, okay, well, should I be concerned about this rash on my arm right now? And you get it. Okay, I'm in a little bit better place. I understand. I'm educated. I understand where I am. AI can do that for folks when it comes to investing. Oh, the market went down. Its headlines are everywhere. The Fed is doing something. You may not completely understand it, but all you see is red on your screen. Well, what does this mean to me? AI can be there to tell you, this has happened before. This is what it means for your goals. Here's what recoveries have looked like in the past. And it can kind of level set you a little bit to help you remove that emotion.
Absolutely. And I guess the WebMD example is really, really prescient, because with WebMD, part of why people trust it or can use it to guide their thinking around their own health is medicine being highly regulated, right? Doctors being having to jump through hoops regularly to maintain their professional standing, and WebMD at least is perceived to be an extension of that credibility. So that brings me to the big question around regulation. And obviously, from a Magnify point of view, you are regulated, but as we mentioned a moment ago around the competition in the space, there's a lot of unregulated activity. So where should regulation fit into the development of AI in investing?
Yeah, when it comes to investing, the AI has to be delivered inside of the existing regulatory framework. And I don't see any other way without taking on unnecessary risk as an individual investor to gambling, because you may not know what somebody is doing. There are a lot of controls that are in place today on professional investment advisors and how they apply technology and how transparent they have to be with the end user and what they have to disclose and what they have to track and keep on record as people go through different processes. AI has the ability at scale to deliver all of that sophistication to the masses. So that needs to be thought through and delivered inside of the regulatory framework. What I would caution folks on are chasing tools that are outside of that regulatory framework. And I think one of the things that does need scrutiny outside of the financial industry, but also the financial industry needs to take a look at, is the adaptation of plugins on top of a lot of these particular tools. If you start from a point of regulation and you're using this technology to deliver it inside of your regulatory framework, like Magnify does, that is something that as an end user, you can understand where that particular tool is coming from, what controls they have in place. If you go outside of the regulated framework to somebody who's not directly involved in investments, like to pick on like a ChatGPT, anybody out there with programming skills can develop a plugin and throw it on top of that technology. And it may be advertising itself as investment advice when it shouldn't be. And I think that's where some of the dangers come in. So I think there is some due diligence that individual investors do need to do before there's nothing wrong with playing things. I think usage and playing and getting comfortable with what's out there, I think is great for everybody. But once you start to give up personal information about yourself, here's what I'm making, here's my net worth, here are my investment accounts, here's what they look like. That is really where you need to draw a line and make sure you're dealing with a regulated entity.
Absolutely. And I guess one aspect of that is around, exactly the risk you highlighted, where somebody builds on an open source platform like a ChatGPT and then goes and partners with an established broker, let's say, and so presents something that might be interpreted as financial advice, gives you a route to execute, potentially exposes that broker to liability. And then you've got the, almost the worst of all worlds as a user. You've got a trusted broker, you've got unregulated AI. Anyway, that's just sort of my doomsday thinking.
No, it's a concern. Listen, I think that's on the top of mind of all the brokerages as well. I think there's a lot of controls in place already on what connections and tools they allow on their platforms and those sorts of things. And I think those will remain. And I think that's actually an example of, the brokers are already on the inside of a regulated industry. It's not the Wild West. And I think that's where that if your broker is putting something forward, they would have had to have done a level of due diligence on that particular tool to understand what the risks are, the disclosures, the transparency to their client base.
Absolutely. Now let's shift gears a little bit. I'd like to zoom in a bit more on Magnify, on how you've built it, and how our listeners and viewers, if you're watching on YouTube, can actually use Magnify and tools just like it. So maybe to set the scene, we've experienced the democratization of access to financial markets to retail investors, right? We've had things like robo-advisors, which in a not too distant past, people would have called AI, through to zero-cost brokers, fractional share trading. And now, in my view, we're in the moment where we're democratizing access to analysis, to knowledge, to insights, to inform the decisions people are making using these platforms they've got fresh access to. And AI certainly has the potential. It's no longer potential, it's happening. It's supercharging all of that, whether that's helping people's research process or helping directly make investment decisions. So, yeah, I guess just to set the scene, it'd be great to hear how you've built Magnify to do these things, and maybe a couple of examples that you can tease out on where that's worked particularly well.
Sure. No, I'm happy to. I think you described it well. I think what was needed for a very long time was access, and that wall has been knocked down, blown through, however you want to describe it. But I think access without intelligence can be dangerous. And I think that's kind of the point we're at now is, Robinhood did their thing in the U.S. and they really put the pressure on a lot of the internet brokers that made a lot of traction before that, like the Schwabs of the world, the E-Trades back before Scottrade was acquired in the U.S. And that sort of race to the zero commission. So now you have these zero commission platforms, the fractional trading, everything you mentioned. Access is very, very easy. But like I said, access without intelligence can be dangerous. And I think that's where Magnify and its AI assistant is coming in. You touched on robo-advisors. And I think for some that can be a solution. I want to fill this out. I want to set it. I want to forget it. And it's going to go do its thing. What we're seeing is that most retail investors still want control. And the missing piece is the intelligence layer. And that's what Magnify is providing. If I had to describe it, I would think of Magnify's AI assistant. We've used the word co-pilot. I think that's extremely appropriate. Think of it as a sophisticated librarian where you come to the platform and you say, when can I retire? Okay. So the librarian understands you have a planning question. This is a financial planning. In a world of an investment advisor, they would turn around and they would use one of the tools in the industry, if you're familiar with them, Money Guide Pro, eMoney. These are tools that professional investment advisors use. I would collect information from you. I would turn around on my computer. I would put that information in and I would start working on your plan. In this application, when somebody comes in and says something like, help me retire, the AI assistant says, okay, let me go get that planning module in the library, bring that forward and start having a conversation with you to collect those inputs and help generate the same way that a professional advisor would. So I think that is one application. On the analysis side, it could be something as simple as, hey, can you compare Apple and Microsoft on sales for me? You don't have to go find a site, learn how to navigate that site, make sure it's got the latest real-time data, figure out how to pull up all the sales data, interpret it and understand. I have a very simple question and I want to get access to that information very quickly. So that's another application on there. Maybe you're on the hunt for things. You want to do a little bit of research. One of the worst performing sectors this year, maybe I like to play the beat up stuff. Okay, now inside of that, what are the best performing stocks inside of utilities as an example? How can I get access to that information very quickly? Now, can you compare these for me on some fundamentals? And those are just 3 or 4 different questions on an interaction that you could have that ordinarily it would take a user a tremendous amount of time. So those are the types of frictions that we recognize are in the industry that face the retail investor that we're looking to knock down with the application of our AI tool here to democratize that intelligence for everybody.
I'm really enjoying your analogies because they sort of spark a bit of a story in my head. And I think the intelligent librarian is a really good one because those pieces you mentioned, hey, when can I retire? Hey, compare Apple and Microsoft to me. Compare them on valuation. Tell me about industries. I can say that to an intelligent librarian in plain English. If I was talking to a dumb librarian, let's say, I would have to understand the Dewey Decimal System. I get sent to 8 corners of the library to pull out the textbook to figure it out myself, right? Even if I've got to go to 6 different websites to figure out where I can get financial data from, understand what that means. And then I've got to match the year ends potentially for Apple and Microsoft to make those comparisons like for like.
That's enough of a wall to have somebody not engage.
Yes.
Like the fact that you would have to go do that is what is a non-starter for somebody to even get off the couch to go do that thing that day, because they're already thinking, oh, that's extremely complex. I'm going to have to learn things. I'm going to go to 8 different websites. I'm not sure where I'm going. This is going to take, I don't know how many hours out of my day. It's a non-starter. They move on to something else. And I think what we're trying to educate people on is the application of these tools are there, like Magnify, and we can break down those walls for you. The other thing you mentioned, Carl, too, that I wanted to hit on was you mentioned insights. So the other aspect of this is, what if you don't have a burning question in the moment? Maybe you're not waking up every morning saying to yourself, what is the riskiest stock I hold? And how do I mitigate that risk, right? You can certainly do that if that's on your mind and ask that question on Magnify and all of your accounts are connected there. But you're not going to wake up necessarily thinking about that. The other application that Magnify provides with AI are insights about your account. So we know what to look for. If you think of all those textbooks and the librarians and the analysis and everything else, that is all running on top of your portfolio, all of your accounts that you've connected, your 401ks, your stock plans, your brokerage accounts. And it can point out things for you that might be of interest. Maybe there's a risk mitigation opportunity you're not taking advantage of. You're over concentrated on a single stock. AI can very quickly look through all of your fund holdings as well as your individual holdings to tell you how much Apple exposure you really have. And maybe there's something you should do across your portfolio to diversify a little bit more. Maybe you're paying too much in fees inside of some investment products. And there's like for like products that are tracking indexes right now that have much lower fees. Do you know how much over 20 years you're leaving on the table in fees that you're paying when there's other appropriate product? Maybe there's outperforming funds compared to the ones that you have. You own something here, it's a plain vanilla large cap growth fund, and it's currently nowhere near the top of its category. Would you like to compare that off with some of the ones that have been outperforming over 3-5 years and showing people that? That's the advantage that AI can bring, that you wake up that morning and you have a push notification on your phone that says, hey, there's an opportunity you may want to look at in your investment account. You weren't thinking about that day. You're packing lunches for school, thinking about the soccer game afterwards and who's carpooling who to go where. But AI is able to look after your investments based on what it understands about you, because you don't have the time and it's not front of mind for you as well. And I think that's very, very important to understand.
Absolutely. I think the fees one, I had earmarked as something to follow up because I'm an absolute cheapskate when it comes to investing fees. And, there are more ETFs out there than there are stocks. And so, frankly, I'd love to, I know I'm missing things because I'm not always going as deep as I can. I'm just picking the ETF that's most accessible, not necessarily that's best value for me.
Yeah. And listen, I don't think I'm any different from anybody else as well. And the reality is, and what can be such a non-starter is, like, where would you begin to start to search to understand those products, to even do this comparison without taking a week off of work to like educate yourself and get access to all of this information? And I think that's one of the frictions that we see. We wanted to bring that forward. I know that in my own portfolio, just over the years, I had a job that had a stock plan. Great. So now I have an account over at E-Trade because that's who managed the stock plan, and those investments are still there. I have a 401k at Fidelity with an old provider. I have my new 401k. I have another brokerage account that I've been trading in for years. My wife has different accounts that she puts in. If you just asked me, Tom, how out of the market are you right now? If I took cash across all of those portfolios, that is such a pain that I would have to go and log on to all those separate platforms at a point in time and write it down and do some analysis just to find out how much cash I'm sitting on if I'm not in the market enough. This is where something like Magnify, where you can connect all of those accounts and then put the AI on top of it, will tell you, Tom, did you know you're out of the market over 8% right now across all these accounts? Based on your goals, you might want to put some of this to work. So I think that's one of the advantages, again, of just knocking down those frictions that are often a non-starter for most people. Just thinking about, I got to go to all these websites that I only visit during tax time, and to pull a few documents down.
I promise I'm not just saying this because you're on the Finimize podcast, but where do I sign up? I genuinely take off a week a year to run through my portfolio, and then I tell myself I'm being so long term. I don't rebalance. I'm not checking anything for a year. It's just because I don't have the time. And if I did start, where do I stop? And so, where do I sign up?
Yeah, it's Magnify.com, Magnifi, Magnify.com. Or if you go to one of the app stores, iOS or Android, and just search for Magnify AI Investing, you'll find us there. You can download it, give it a spin. And that's one of the things I would say about these tools is you're in control. It's up to you and how much you want to share. If you want to hook up accounts day one and have the AI assistant analyze it for you and point some things out that you may not have known, it's there for you to ask questions about your portfolio, about the market in general. And I think just getting a little comfortable and getting up the learning curve a little bit. And I think it's this whole distribution of tools like this, back to the WebMD example, maybe it's 11:30 at night and the football game ended and, you pull your phone out real quick because you have a question on your mind. It's very non-threatening to be able to ask that question in the privacy of your own home, just trying to get a little bit more educated. And I think often people are thinking, I need to be in a category where professional financial advisors would want my business and I need to set up time and all that. And you don't need to do that. This is very, very, very accessible. And I think people should give it a try over a period of time and see how they're understanding their investments more, how they're understanding their own financial picture.
Tom, fantastic. Thank you very much. We're almost coming to the end, but before I let you go, I want to squeeze in a lightning round, if you would be so kind.
I'm a little scared, but I'm game.
Tom, tell me, what was your first investment?
Yeah, my first investment was actually a bank in the U.S. called PNC, and that was gifted to me. My grandfather had passed away when I was younger, and as a part of that exercise and wealth transfer in the U.S., all the grandchildren were gifted stock. And as a kid, to get your own mail and have your name on it and tear that thing open and see PNC stock there with a dollar amount, it was
a dividend check
statement. I didn't know half the stuff half the words on the page. But to me, that was my first understanding of access and seeing things move over time and appreciate by the time I was old enough to actually open up my own accounts. That was my first peek into the world of investing.
Fantastic. Now, a bit salacious. What was your worst investment? Don't say PNC. It'll break my heart.
No. That was actually, it's a good investment. My worst investment in recent memory, I let emotion get the best of me, and I bought a little too much of the Robinhood hype train when it came onto the market. And admittedly, I held on to some of that a bit too long. In fact, I'm still carrying some losses to date on that to hopefully offset some other gains. So I don't know if that overall was my worst investment, but it's definitely the one that burns in recent memory.
Okay. I mean, you can tell me your best one if you'd like to correct that balance in the ears and eyes of our listeners and viewers, but it's not on the list of questions.
Well, listen, I think I've had the benefit of diversification too. So I think I'm a Magnify customer. I use our tools. I think that was in a period where everybody's got play money, I think, and that's okay. And to be able to go out and invest in a company you like or a brand you like. I know my son's into video games and he's graphics card. He builds computers and all this type of stuff. So NVIDIA has been doing really well for him. But I think that type of thing is okay. But definitely the approach I take now is more of a goal based. Like, what do I need for my family? What do I need to be investing towards to be able to put my kids through college, to be able to retire when I want to? So I'm probably less of the chaser than I may have been if I was a bit more younger.
That's fair enough. You talked about being well diversified. Which investor do you admire the most? You can say yourself.
I would not say myself. If I had, this is a really good question, and I'm going to go non-academic on this. The investor I admire the most is probably my brother. He's in a position now where we're not that far apart in age. He's in his 40s, and he is just about 100% debt free, including house, cars. He's got a nice nest egg. I think it's probably the opposite of what a lot of people feel the urge to do and chase that instant gratification. He's always had a very long-term view, even from back of right when he graduated college, got his first job, making sure he was matching that 401k, maximizing his retirement contributions that he could put in every single year. And he's been very disciplined at doing that. And that's, as a 20-something-year-old coming out, living on your own for the first time, you want to do all these cool things and buy some toys as you get your first job and do all these things. He's been very, very disciplined. And as time goes by, I really appreciate that long-term view that he's had on things. And I see where he is at now in his life and how prepared he is for emergency situations and things of that nature. So
He's not buying the dip on Robinhood.
He's not buying the dip on Magnify, I can assure you.
Okay. Well, that's why you're holding onto the stock. You haven't got a willing buyer just yet. And maybe just the last one. What's the best piece of investment advice you can give our listeners that you wish someone had given to you when you were starting out? And it might be from your brother in hindsight, but anything else?
Yeah, definitely. I think it resonates across that and a few of the examples we just talked about. But I think it's so tempting to try and time the market. It's just so tempting, thinking that you see an opportunity there. And if you're not living it every single day inside the minutia and all of the data, you're not really doing yourself justice. And I think having a longer term view and being able to understand where you are when you do see a lot of red in your account and things are down, and understanding what that means historically and all that, I think to not try and time the market and chase that instant gratification to feel good, that long pull view is something that if I would go back in time, I would reinforce on myself.
Fantastic. And just to remind everyone around or about where we can start to think a bit more long-term and thoughtfully about our investments, where can we find out more about Magnify?
Yeah, go to magnify.com, Magnifi, and we have some information there, show you a little bit how the tool works. And you can also download the app directly from the iOS and Android stores, Magnify AI Investing, and start kicking the tires, start asking questions. There's no harm in that.
Fantastic. I'll be on that absolutely very soon indeed. All that's left is for me to say, Tom Van Horn, thank you very much for joining the Finimize podcast.
Thanks, Carl. My pleasure.